to think about cryptocurrency. Anytime somebody who's new to the crypto space in particular looks at this and say cryptocurrency. Crypto sounds like cryptic, that naturally people gravitate to cryptic, therefore illegal. And so let's break that down. Crypto, the term, the part of cryptocurrency that comes from crypto is actually from cryptography that's been around for the millennia, which essentially means um, encrypting a message in one location that needs to arrive to another location. But then once that recipient receives the message, has to have a key or way to decrypt it so that it can be understood. And it doesn't, that message is very important not to be intercepted between person A and person B. Often in times of war, often in times of, it makes me think of any time you need a secret information message to get from point A to point B. Here, instead of just a message to tell someone something, the packet or the message is actually value connected to a currency. So when you think of cryptocurrency, you're thinking of existing technologies that are combined in a novel way. That's peer-to-peer technology. Shout out to my Gen Xers and millennials who remember peer-to-peer file sharing. For those of you who will listen to this later, I'm doing that in air quotes because I'm an IP lawyer. And there was quite a bit of copyright infringement going on in the craze of peer-to-peer file sharing. But using that tech, you sit around in your fuzzy slippers at home. I have a perfect digital copy of my favorite music and I send it via the internet to or an application to 10,000 of my not so closest friends. That might be fun for music and media files, not so fun for the industry. But it's horrible for money, right? It's horrible for money. You do not want to have someone who keeps their money but can replicate it. There were digital currencies that predate Bitcoin. The problem with those is they hadn't found a way to have a one and done proposition where you can't have a what they call a double spend. That I could have $100 and maybe write a check back in the day. Some of you might remember a check, and I'll send it to Susan and I'll send it to Melissa. And the first one to get to their bank and cash it is going to be a winner because I only have $100, but I sent out two checks for 100. That is the double spend problem. And Bitcoin solved for that using cryptography, peer-to-peer technology, the internet, and consensus, which is a higher level topic that we don't have the space to really go into, but a way to achieve consensus or agreement as to the state of the transactions and balances at any given time. That is not dependent upon one siloed individual or agency or organization or country, but based on the software. The idea of rules, not rulers, is really, really an important part of the ethos and spirit of cryptocurrency. So that's where the crypto comes from. In terms of Bitcoin, Bitcoin launched again in January of 2009. So we have some incredible historical data. For those who are just joining earlier when we first started, I shared this resource, coinmarketcap.com. I'm going to drop this in the chat again. And it basically is an aggregator of data. It is free 99. I don't want you going onto the internet and searching a product or project or a coin or a token. Go to something like coinmarketcap.com, use the hyperlinks there, and that will keep you safer and less likely to land on a scammy site or a scam project or what we call a rug pull, here today, gone tomorrow. So that's one way to keep yourself safer. Bitcoin and other cryptos, easy to hold, verify and secure, difficult to create, impossible to copy, which is critically important. You can't even say that about counterfeit dollars. For example, it is divisible, so you don't have to buy an all or nothing. It's not an all or nothing like a stock usually is. There is a limited supply. That's hard sound, hard kept money. And again, defined by the rules of the software, but not a particular ruler. That is a fantastic counterbalance to fiat currency. The final point to really distill the term blockchain to its basic essence, think about the idea of having this digital record of every transaction and balance for Bitcoin, right? Let's analogize that very roughly. If you're a technologist, this is gonna make you cry. But for the rest of us, I'm a non-technologist. This was something that helped me start to understand how important the redundancy and replication and storage of information can be. And so we see that with blockchain like a group text where you might have 9 people in a group text and there's this record of every single text. I might delete that entire chain off of my phone, but as long as there's one phone that still has the record, that record of information persists. And now extrapolate that not to a phone, but to computers around the world that are maintaining this. So and it's the lights could go off in an entire country. I hope it's not, but it could. But the blockchain and the records will always persist. There's a time-stamped record of every transaction and balance that is actually public facing as well. You don't have to trust me. You don't have to trust the person with whom you're exchanging. The idea and the concept of trusting in the record that is time stamped and immutable makes it very, very powerful. So it's ideas like that and the disruption at the intersection of my existing area of expertise. Told you I'm an IP lawyer and technology lawyer and a property lawyer by training. Um, my first search to try and figure out, I don't want anything to do with magic internet money. I do want to be responsible as a lawyer and a law professor and educate the next wave of lawyers. What did I have to know about the disruptive impact at the intersection of my existing expertise and this new technology? So I want it to be more like Netflix and less like Blockbuster and stay ahead of the curve. When you see the writing on the wall and things changing, those who have a first mover advantage, although there is great risk, there's also great reward in those opportunities when most people are on the sidelines. And although Bitcoin came out was launched in 2009, the idea of holding crypto is still relatively new. Fewer than 10% of people around the world. I know that Black and Brown folks over-index in crypto, not just here in the United States, but throughout the diaspora, for example, because there's no intermediary keeping Black and Brown folks from engaging in this area or anyone. And from that point of view, it's quite progressive, it's quite egalitarian, and that is not a statement about politics, it's just equal access into the system. Now, I want to transition into this idea of the wealth gap and how we get there by understanding the difference between income and wealth. When was growing up, I was told, and perhaps you were told this as well, give me a plus in the chat if this sounds familiar, the idea to, number one, get your education. No matter what, no one can take that away from you. It opens up doors, it creates options and opportunities. It's not the only way. And certainly education has fundamentally changed, but getting your education is critically important as a matter of options. Did that, right? And then you get a good job, good government job, or some similar equivalent, whatever that means for you and your generation. Um, Doctor, lawyer, et cetera, et cetera. Get that 6 figures. That was something that was always said, let me get my 6 figure job and someone's going to pay me a lot of money and then I'll stay there a long time. I'll buy a house. I guess I'll get some insurance, right? I'm going to max out my retirement benefits, a burial plot maybe, and I'm just going to ride out into the sunset. Evidently, that's it. I made it, right? High income, because wealthy people move in the way to minimize their income and maximize assets that actually have a return on investment so that your assets are working harder than you so you can spend more time doing the things you enjoy with the people you love, having options and having freedom. And freedom is a multifaceted concept that we'll talk about. So that led me to just revisit, reimagine, and really think on net worth versus income. Your assets minus your liabilities, that's your net worth. I think that now being middle class means you can have access to debt to forever keep you in financial slavery, right? The one difference between those who are at a lower economic status and those who are in the shrinking middle class, your ability to get unsecured and secured debt and therefore be beholden to that job that's paying you that six figures so that you can basically try and hold yourself above water. We know how difficult that has been over the decades, and the difference between high income versus wealth. Traditionally, the focus has been on buildings and land. Own those, continue to invest in those. I love real estate. Have something that I'm doing this year, for example. Love real estate. Stocks and bonds, got them in my retirement account, have them outside of that. Work with my financial advisor, critically important. Businesses and intellectual property, check. Doing that through Advantage Evans Academy. That's how we are connecting today, in addition to my professorship as well. And remember in the beginning when I told you I took a leave of absence to write my book and to go out and do the speaking engagements and the consulting and board advising that I'm currently doing now, I had the option and the opportunity to do that because I could leverage assets that I had invested in to create the space to do everything I want to and nothing I don't. That is a power play that comes not from being a high income earner. Income is taxed at a much higher rate than capital assets are. And the new capital asset that lets us know, one, that traditional approaches are not enough. Do all of those things, all of them. But don't wait to do all of those things to pay attention to and get a first mover advantage with the latest type of capital asset. Cryptocurrency is a bit of a misnomer, right? We see it, we hear it, we see it, we think currency, we think medium of exchange, we think unit of account. Crypto is taxed in the United States and in places that adhere to capital gains and losses as a capital asset. And this is why what makes Bitcoin a bit different from other cryptocurrencies that don't have a hard cap. Bitcoin has a hard cap. It's taxed as a capital asset. It actually has the characteristics more of a store of value than really functioning well, in my humble estimation, as peer-to-peer cash. Absolutely. You have Bitcoin, you want to spend it, knock yourself out. Um, I choose to use it as a store of value. I think because of the volatility and the unique characteristics of hard sound money with a hard cap, like a gold that is a finite resource, like land that is a finite resource, and unless and until there's some volcanic activity that creates a new landmass, those things that are um, either rare or finite, those things have value as more and more people want to own them, and the asset just is what it is. That is a power play that makes us think, in addition to all of the traditional things you are doing, making sure that you are learning as much as you can to participate in the crypto economy when most people are on the sidelines believing the myths that it's a scam, only drug money, here today, gone tomorrow. If you sit on the sidelines, potential for high returns, the volatility, we'll talk about that. Yes, this all nascent asset classes are volatile, and still until they start to settle, more people hold it. There's more structure, there's more clarity and definition around regulation. There are more products. For example, there are Bitcoin exchange traded products available right now to you. Your financial advisor may not know. I've worked with many that did not know, and that cost me a few coins, I will assure you. But with the risk comes the reward, and we're not dealing with the absence of risk. We're looking for calculated risks, diversification, exposure to emerging projects, financial participating in the global financial markets, which really opens up liquidity. And opportunities to trade not just within your own geographical boundaries for a country, but beyond that, and getting a first mover advantage. That's the opportunity where risk meets reward, where you're taking calculated risks. That means informed risk. That's knowing what you don't know, knowing what you know, knowing what you don't know. And then this other quadrant where you don't know that you don't know, that's where we can get taken advantage of. And that's what I hope to empower you to avoid, so that we're taking calculated risks, that we have enough information so that you can claim your first mover advantage. Now I want to go into this kind of a short portion where, in order to write my book and to really make sense of what is the activity of an emerging asset class? Because it's not enough to just say this asset class is um, volatile, and so I'm going to sit out on the sidelines. I wanted to study the movement of other markets when they were first introduced. That means the Dow. I'm very interested in the New York Stock Exchange, and in doing some writing around that as well. The Dow, the Nasdaq, the S&P, the NICE. How did they begin? Where were their periods of volatility? And when we take a step back and look to the lifetime of either an asset class, or a market, as determined by the index, here we have the Dow beginning, and we know now the Dow is rocking. It has hit the heights that no one ever thought it would, and it just keeps going. Anything that's up and to the right, it has my attention. Are there going to be dips? Are there going to be retraces? Are there going to be pullbacks? Are there going to be quote unquote crashes, either as a result of the asset class, the industry, or some macroeconomic thing, hashtag pandemic, that comes in having nothing to do with the underlying asset? Those things happen across all markets. Looking back at the lifetime of a market or an asset class versus the 1 day, the 5 day, the 1 month, the 6 month, the year to date, the 1 year, the 5 year, gives you a better idea of the health and the quality of an asset. This is the niece life cycle. It looks like something, it looks like an EKG and somebody's having a very bad day. But here's the life cycle. It's up, it's down. I mean, this is volatile, right? Until it kind of, and then we have a major pump. We have the pandemic. Not quite sure what happened here. And then look where we are now, right? Oh, sorry about that. Then you kind of look at Bitcoin. Now, Bitcoin looks a little bit different. It moves different. Remember that we don't even have data for it back in 2009 because it wasn't worth anything until the first event where someone paid, I think it was like 4 or 5 Bitcoin for 2 pizzas. We could call that pizza day, or pie day in the crypto ecosystem. We start chugging here around 2017. Um, and then with some retracing, some pullback, 2019, those was really starting to get the attention. Now Ethereum is in, and all of these tokens are being generated to record their transactional information on the Ethereum blockchain, or the Ethereum virtual machine. So there are a lot of token projects that don't have their own um, blockchain, but write their transactions to an existing blockchain. That's the difference between coins and tokens. We had a major run up, the latest all-time high there, then a major retracing, and everybody said Bitcoin's over. Notice that the new lows tend to always be higher than the previous highs. So if I was able to draw a line here to say, oh, low, that was a bad day. That wasn't a bad day if you bought here, or here, or here, or here, or here. Tough if you bought here, but if you bought for a long-term strategy, our new all-time high is here, 74,000 in this year, 2024. That when you do an overlay of Bitcoin and the Dow, the Nasdaq and the S&P 500, are all kind of mirroring. And then you see this real bounce here for Bitcoin in particular. The volatility has also created opportunity, and it, like the other indices, are moving up and to the right. Think about how, so if you've learned something new that you didn't know before, drop a +10 in the chat. Drop a +10 in the chat. If there's something that you've heard at this moment in time, that you didn't know before, because I always want to leave people, places, and things better than I found them. I want to make sure that we're on the same page right now about the promise and the opportunities and what you can see when you take a wider view of an industry, not from a sensational headline, not from the myths and sometimes disinformation. Because when you disrupt an industry that is as heavily regulated as finance and banking, you're going to get some pushback, for sure. But the pushback is on the headlines. But behind the scenes, this is what I want to show you about what banks don't want you to know. This is fascinating as I went back. Now, I kept some information to give you historical context of how banks are moving. Um, uh, Someone who I respect very much, Terry Egioma, has this fantastic course called Trade and Travel. In fact, in my follow up, I'll send you more information about what Terry's doing because I've learned a lot from her in her program, Trade and Travel. She teaches swing trading in the stock environment. This It's not a one-to-one fit about the strategies from swing or day trading in stocks versus Bitcoin or other cryptocurrencies because the markets are different. There's no pause, there's no reset, but a lot of those things can roughly be analogized. But one of the things that I've learned a lot from Terry is that you want to move the way the banks move. Anytime we see activity moving the needle on a stock market basis, we see things are up, things are down. The amount of money that goes into the movement for stocks to go up or down, that's not everyday retail money, that's bank money. So we need to figure out how the banks move and pay attention. Okay, say all that to say, there was a survey a few years ago of millionaires finding that 73% want to or own and invest in crypto. And that was interesting. Again, that was in the end of 2022. Also was paying attention at the time because I began Advantage Evans Academy in 2020. Already started writing and training and teaching both law students and lawyers and other legal professionals, going out to the World Intellectual Property Organization, training hundreds of staff there, all around the world doing those things. And I was paying attention to stuff like this. This is in 2021. Deutsche Bank quietly plans to offer crypto custody. And I was like, quietly? That's interesting. Also, it's interesting to see in February of 2021, the price of Bitcoin, 47,000. Right now, you just saw in real time that we're at 61. Not a bad day. Um, I always laugh when I see like Jamie Dimon from JP Morgan railing against Bitcoin. And I think he probably really does have this personal disdain for it. But guess what? JP Morgan, the advisors there, skeptical of Bitcoin to say the least. But now the bank's analysts say that it could triple, challenging gold. Remember what I say that we refer to Bitcoin as digital gold because there are a lot of comparisons that could be made. This was October 26, 2020. October 26th, 2020. So I don't think that hit a lot of the mainstream. But this is something that we need to pay attention to because banks have been paying attention to it for years. They didn't have a customer service issue that was sufficient to move the needle to make things better, faster, and cheaper. But they were very interesting in the underlying technology. Here we have something from 2023. BlackRock, one of the stalwarts in the investment game, one of the most conservative firms around the world. With Valkyrie authorized participants, including JP Morgan, for Bitcoin exchange traded funds. 11 funds came online in January of this year. You don't have to buy the underlying asset of Bitcoin. You can actually, in a heavily regulated product, go to I'm not sponsored by any of them, but I will list, and in full transparency, I own BlackRock ETFs. I own Bitcoin outside of that. This is a both and play and strategy as well, and I want you to pay attention to that. Bank of America was one of the last banks to have anything to do with it. In fact, I had to replace not just my financial advisors at Merrill Lynch and Bank of America. I was speaking a language that they didn't want any part of. They didn't know about it. They didn't want to know about it. And I had a very difficult banking relationship with them, even to get a bank account for pure education. I do not sell coins or tokens. I do not trade on your behalf. No Forex, no cap. I don't do it. I'm licensed to practice law in 4 states. I am an educator. And I could not get a bank account early on. I do now. I had to let them go. But guess who's back? Because Bitcoin brings all the banks to the yard. We have Bank of America, Wells Fargo. They had a great disdain for Bitcoin. Now they're offering access to Bitcoin exchange traded funds because They were launched in January of 2024, and the launch was so successful. Even these firms said, "Oh my God, we're missing out." They have FOMO, right? We're not the only ones. Visa has been in, MasterCard, Fidelity is a long time um, um, wonderful participant. Fidelity has some fantastic products that you can eat and a great learning platform where you can open an account, you can begin trading crypto or at least buying. Trading is a separate thing. Buying and holding, or hodling, as we might say in the crypto space, there was this is kind of a famous that turned infamous misspelling of hold. Just buy and hold and stop worrying about the price going up and down every minute. And instead of writing hold, the person typed um HODL, and now we say hodl or hodl. And so it's like buy and hold. I'm a long-term strategy investor. You open an account, you set it and forget it. Those are the ways. Here's something again, although I'm not encouraging you to look at prices every day, I think you should familiarize yourself with the ecosystem just in the beginning, in particular. Get to know the language, get to know the movement of the market, the energy and the life cycle, and also pay attention to predictions. Predictions are just that. It could be 1000% wrong or accurate or somewhere in between. So this is why I like to look at the Changely blog for the year, the minimum price, by the end of 2024. These are predictions, the average price, which is interesting. And remember, I just mentioned that the recent all-time high was at 74. We're halfway through the year. Trading kind of tends to move sideways in the summer, interestingly, unless there's some other, again, economic force or macroeconomic force that leads people to start trading more. The maximum price is set just south of 100,000. These are predictions. But then the wonderful thing about predictions, as you can extrapolate out, buying and holding this year, even a small amount, buying and holding for the potential upside that can happen with the money that more and more people will want to have at the same time the supply is reducing, and has a hard cap. That makes Bitcoin special. That's not to say that you won't hold other types of coins and tokens, but use Bitcoin and its history as kind of the way to level set and test against other things. If I'm buying Ethereum, it's not because I intend for it to act as Bitcoin. There's another reason for buying Ethereum or Dogecoin if you're into memes, for example, Shiba Inu, blah, 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 all those things. And I'm not discouraging you from those things, but use Bitcoin as literally and figuratively the gold standard that by which you're um, testing everything else so that you're using and investing your money wisely. And so I want to talk now about what is keeping you stuck. If there's some things that you can speak to in the chat about maybe FOMO or your concerns about buying or buying again. There are people who are participating where they've been scammed before. So that makes you far less likely. And even if you haven't been scammed, someone like me who's had user error, I have literally sent assets from one of my wallets to a wallet that does not support that token, and I may never get it back. And fun fact, it's worth a not insignificant amount. Not enough for me to literally jump out of my window, but enough to make me silently cry at night. And that's the thing about being your own bank, is that in many instances, although the user experience and user interface is really improving, it's so much better in 2024 than I was in 2017. And I have a weekly podcast, the Tech Intersect podcast. I'm going to drop that in. I've seen a lot of you uh, follow me on YouTube and also to subscribe to the podcast. So thank you for that as well. I think we have 300 new followers at YouTube just in 28 days through this program. So, but if you're not already connected, definitely look for the Tech Intersect podcast wherever you listen to podcasts, and also techintersectpodcast.com for more information. I've been talking to a number of people, both on the investor side, but also on the professional side, that what keeps us stuck, what keeps us from researching to death, but never actually getting in, this resonates with you, give me a thumbs up or +1 in the chat. I know that there were things that I had to overcome as well, and so I want to share the method of how I moved through this as an offer to you. Shout out to Arlen Hamilton, who had Your First Million live in LA, who's also a co-forward author for my book. I presented the Bitcoin bounce back framework there at the Peacock Theater. It was balling out of control. It's amazing. I was honored to share the stage with folks, but really crystallizing this framework into, um, the bounce acronym. But first, before we get to that, and then I'll take your questions, or if you have any questions along the way, start to populate those in the chat and I'll answer them when I've finished this and kind of turn my attention to you. But understanding that we fear what we don't understand. Fear is not a successful investment strategy. Either fear of getting in, fogey, I made that up, or fear of missing out, FOMO, right? So let's talk about it. And this is stuff that you can find in Digital Money Demystified as well. These are things that I believe they're myths, or at least right sizing the conversation around these beliefs. Some are just wholly just not true. Some have a kernel of truth, and some are things that we need to pay attention to, but also to right size the conversation. So, for example, crypto is complicated. I'm a non technologist. I've introduced this to my parents who have their own, my mom in particular, who has her own wallet. May not have a lot in it, but she set it up. She got her friends. She is a boomer. She's a young and fabulous boomer, but a boomer nonetheless. You have to educate yourself on the basics, but if you can open up a new bank account or checking account or install an application or install a program, you're halfway there. Coinbase has a great onboarding program that if you're first getting in, although there are a number of different, I showed you there are almost 800 different types of exchanges. Americans can't always participate in every single exchange around the world, or there's some geofencing going on. So you want to stick with a trusted, reliable network. Coinbase was the first company to go public, for example. You are seeing a lot of their commercials. Crypto, if you want to learn cryptography, I guess we would have to go to school, but you don't have to know any of that. You don't have to run a Bitcoin node or even know what a Bitcoin node is. You don't have to do a lot of things. You always have to educate yourself on the basics of purchasing and investing so that we're not scammed and that we're utilizing trusted resources, but also start trusting yourself more. And the only way you're going to do that is by continuing to educate yourself. So start to think about what your next right step is going to be after this presentation. We have about, because we got dropped while I had to restart my computer, we'll be on a little more than the bottom of the hour. Originally, we were going to end at 12:30. If you have to go, then you will have limited access to the recording. But again, for those who are on, I'm going to make sure that you receive a free code to get my quick start resource and toolkit that you can access online. I have 7 short modules, tools, resources, all of those things. Thank you for joining me today as well. Crypto is only for criminals. Less than 1% of all activities, less than 0.5%. And this comes from Chainalysis. I go into greater depth in the book. Less than 1% of all activities are illicit. The number one currency used in illicit activity is, drum roll please, the almighty dollar. And I don't know about you, but I'm not burning my dollars, throwing my dollars out at all. The underlying currency is not a scam, although some Bitcoiners would say that literally fiat currency is a scam. But it is people using it and abusing it and taking advantage of our lack of knowledge or our willingness or desire to get rich quickly. Now, when I say get rich quickly, I would love to get rich quickly. That is my sole focus, but not at the expense of losing my good common sense, not at the risk of being cautiously optimistic and prudent and well informed, I should say. It makes me think of learning what I need to know to drive my car from A to B. I don't exactly know how that supercomputer works, but I know what it does. And when I need to learn how to put in window washer fluid or pay someone to do so, or change my own tire or pay someone to do so, I'll learn what I need to know when I need to know it. We're way past the information age. There's actually too much information. Now we have to curate it to make sense. The idea that crypto is not secure when the data is actually stored cryptographically, I explained that process. It's inherently secure, that it's volatile. We talked about volatility and actually the value in the volatility because that creates opportunity for right-sized risk and reward strategies. That it's maybe crypto is only for the tech bros, whatever that might conjure up in your mind. This is a diverse space. It has women, people of color at the forefront of this movement. Over on the continent of Africa, for example, there are a number of countries that are ahead of the curve in terms of use. This is a non-issue for so many places that have leaned in and are moving forward. We've already talked about scam. Actually, people, I hear this more than anything, and I just don't understand why people say this, that crypto, because it is perceived as the wild, wild west, and any early emerging asset class can be viewed in that way. I showed you that as the example with the other with the stock exchanges. But this idea that crypto is completely unregulated just couldn't be further from the truth. Crypto, the financial technologies have disrupted heavily regulated industries. That didn't change because we have a new product. We have the Securities and Exchange Commission, we have the Commodity Futures Trade Commission, we have Department of Justice, we have the IRS. All of those regulations and rules apply to this asset class. The problem is this novel asset class is challenging existing laws. It is finding holes or gray areas that need greater clarity. But I've already introduced to you that we have exchange traded funds approved by the SEC in January. We will have Ethereum exchange traded funds, not a matter of if, but when, probably, you heard it here first, probably in July. This year, we will have we have spot Bitcoin exchange traded funds. Learn more about that. I have a whole segment on YouTube about that where you can learn more as well. And this idea of untraceability, there's no better way to trace an asset than on a blockchain. It is public facing. It is fully transparent. Everybody is identified by their wallet, not by their name. So it's pseudonymous. We take on a public wallet address in the same way that if someone was sending you mail, they would have to know the address of your home, but only you have the key to unlock your house or unlock your mailbox, for example. That's the difference in the way that you might give someone a public address but have private access. And it's the same rough analogy in the crypto space. So let's quickly go through the Bitcoin bounce back framework that I want to offer to you to start moving through uh, getting started or getting started again or taking this to a new level. Maybe you have crypto, now you want to involve yourself in decentralized finance, where now you really become your own bank and you can take out a loan against your assets and lock them up in by way of what we call smart contracts. You're paying yourself back. It doesn't involve a bank. You're pulling out equity in the same way you might take a home equity loan, right? Because now, again, we're dealing with a capital asset. Understanding the fundamentals at the level at which you need to, and then you can always learn something new, right? So that's understanding fundamental concepts in blockchain, maybe how crypto works. Maybe you're intellectually curious and a lifelong learner like me. I learned a lot of stuff that I actually don't need or use, but I'm just wildly interested in and intellectually curious. Learning about the different types. Hopefully, I've started the process of you understanding and being able to distinguish Bitcoin from alternative coins, which is anything but Bitcoin. We haven't talked really about stable coins, but they keep their value at $1. USDC is a great example of that. That is controlled by a private company, Circle, but a trusted actor in the space. USDC might be an entry point for you, where you're like, I can't, my risk tolerance won't allow for a lot of volatility, but I am interested enough to hold some cryptocurrency as long as it's stable. Stable coins will offer you that as well. Recognizing the importance of security measures, the right wallet, the right keys. We've not talked about private keys per se, but the first thing you're going to need is a wallet, and the second thing you're going to need is an exchange account. And you can learn already wallet launch programs, quick and easy. I did a 3-day challenge that I now offer virtually. You can have instant access to that as well. The O in bounce is overcoming your obstacles. And if bounce were spelled differently, then we might start here. But hopefully with the basics will then challenge your assumptions, and you get to take a second look and to access not just one resource, but use a bunch of resources, because if you have some agreement around several different types of resources, that helps you to have confidence in them. So yes, my book, but also another book or another program as well. So you're comparing and contrasting information, learning to navigate market volatility, regulatory changes, security risks, but also the obstacles in our mind, the mindset as well. So addressing your fears and misconceptions and getting the right information from a trusted source, discussing the volatility in community. You can do this in a DIY way, but the best way is in community, because you're getting constant feedback from other people who are like-minded and along the same journey in a trusted network, for example. Providing uh, getting the case studies as well for long-term crypto investments. Again, if you're working with me or learning from me, we're talking about the long term. This is not a short-term fix. That we're playing the long game as well, or solely, quite frankly. That way you can uncover opportunities over time, learn to spot and seize undervalued assets. Emerging trends is also critically important as well. So what does that mean when we're uncovering? Exploring emerging trends, learning to analyze market signals, really important. Examining, again, successful investments that might be an advantage to you as well. Nurturing your network is really, really important. So building the supportive community to be able to collaborate. The best ways that I started to learn early on were going to meetups, talking to people, getting ideas, figuring out what worked, what didn't work, what to lean into, what to stay away from, the different types of tools that would be helpful, the learning resources as well. Maintaining relationships so that you're not operating in isolation is really important. Also, that comes with insider insights and a trusted expert or a series of experts with whom you want to connect. Networking is critically important. This is one of the most important, is continuing a continuous learning. And the C is not just continuous learning, but really committing to it. Intellectualizing, pontificating, considering. At some point, you got to get off the sidelines and into the game, whatever that means for you. Forward progress, because standing still is not an option. The world finances will change more in the next 2 years than it did in the last 20. We see that with artificial intelligence that has so quickly transformed just the whole collective mindset of the way that we connect, the way that we work, the way that we play, the way that we interact, and quickly moving just from centralized artificial intelligence to decentralized artificial intelligence, which is really the marriage of blockchain and artificial intelligence. I'm going to start talking more about that on the podcast and sharing more with my newsletter. So make sure that you remain connected to me for those updates. So prioritizing some form of ongoing education, whether you're trying to get that from YouTube University, you're connecting with me at the Advantage Evans Academy, or some other way, listening to a podcast regularly, reading CoinDesk.com. I'm going to put that in the chat as well. That is the trusted news resource and outlet that I use most often. There's Cointelegraph, there's Forbes Crypto, Yahoo Finance, all of these outlets, even CNBC, they have the ticker symbols for Bitcoin, ETH, and some other coins and tokens. They're regularly talking about it as well. Continuous learning within the crypto ecosystem and just economics and finance writ large. And finally, start exploring. Start exploring at a very low amount, the amount that you can afford to lose. You can open up your if you have Cash App, you can literally open up Cash App right now, and one of the tabs says buy Bitcoin. Buy $10 worth of Bitcoin. Let it sit there and then learn what to do with it next. You already have a relationship with Cash App. You already trust it, or you wouldn't have the application and have connected your bank account. There are ways that you can buy, and then you can move it off of, my teaching moves it off of central exchanges or platforms and into your own wallet, but maybe you're not ready for your own wallet. Use a trusted resource. Use Coinbase. Use Fidelity to set up an exchange traded funds. Exploring is going to be critically important so that you are venturing into new areas. You're embracing innovation, and also to balance that boldness with prudence. So one part of my From Cash to Crypto course focuses on the prudent crypto investor. It's not throwing money willy-nilly. It's not throwing it out and to see what sticks. It's not buying every single meme coin that you could possibly do because you can buy 10 million of them and you quote unquote can't afford Bitcoin. If you're buying a whole bunch of meme coins, you better at least have the gold standard in your portfolio as well. And then evidently just have money to play with. There are robust communities for Doge and all sorts of things. A meme coin essentially, and I have a slide on that, so I don't want to steal all the thunder, but the idea that something starts out as a joke, but so many people take it seriously, it actually creates a value economy. That is the story of Doge. That is the story of Shiba Inu. So if you have money to play with, great. Do all of the traditional things and then all the traditional crypto things. We get a chance to say that now, especially with the OG Bitcoin starting in 2009, right? Do those things, the real estate, business, stocks and bonds, all of those things, intellectual property, Bitcoin, and then the rest. All right. Here's something that I want to share, and let me know in the chat. Have you heard about these Bitcoin exchange traded funds? You can get them from BlackRock. You can get them from um, Grayscale. As in full transparency, I'm on the board of Digital Currency Group. We own Grayscale, right? But exchange traded funds and IRAs, Bitcoin IRAs, these are very popular in the crypto circle, but not enough people outside of like this little insular system know. We have a thumbs up in terms of Ronald, glad that this is on your radar. Two ways where you also can have exposure to Bitcoin while not, at least in the Bitcoin IRA sense, you're putting it in a retirement account. So you are not worried about some of the price issues and some of the tax consequences of buying and selling a capital asset, right? I love Bitcoin ETFs. I told you that I hold some BlackRock Bitcoin ETF shares in a Schwab account. There's ease of access. You're not buying the underlying asset, but you're buying something that is literally traded on the stock exchange. There's ease of access. There's stock market integration. There's risk mitigation. The tax efficiency of owning Bitcoin ETFs, I think, is great. You'll get the right tax forms at the right time. So as you're learning early on, you're not missing the participation and exposure to Bitcoin while you are learning, and you're doing it in like if you have a low tolerance for risk, your entry point may be a Bitcoin ETF. Offers liquidity, high liquidity. Quite frankly, it's easy to enter and exit positions in the same way you would do for any exchange traded fund, any stock, any mutual fund. You can buy and sell in that way. And it's in the formal, traditional, regulated wrapper or framework for products with which you're already familiar. So that's something that I want you to learn more about. This is interesting with Larry Fink from BlackRock, because the ETF launch for Bitcoin was so incredibly successful. It just mystified TradFi, traditional finance folks, right? So Larry Fink saying he could have never predicted the amount of retail demand for their spot Bitcoin ETF. And he's convinced BlackRock, one of the most, as I said, traditional and conservative investment firms, is all in, and that gets the attention. How are the banks moving? Oh yeah, he's dripping money, right? He's dripping money. This was interesting because it was a screenshot from CNBC. I watch every day, and I'm always fascinated to see what the eggheads are talking about with respect to Bitcoin and how much their language around Bitcoin has changed. And at the end of Q1 of 2023, this was a screenshot that I took of the best returns for last 2023 was a fantastic year for Bitcoin. You didn't hear that on the front pages. You only heard about the scourge on the ecosystem that was Sam Bankman-Fried, total scammer. The underlying asset wasn't a scam. He was a scammer. And he did what Lehman Brothers and Bernie Madoff, like it was a pure Ponzi scheme, encouraging people to uh, uh, send their assets onto the FTX exchange. And remember, exchange is for one thing to another. It's not a bank. It's not a place where we want to keep our assets. But he was promising a huge return in terms of like interest or yield. So people were encouraged to leave it on and earn like 8% or something. Unbeknownst to them, without their consent, he was transferring their assets to Alameda Research, his sister firm of a hedge fund, making terrible bets. And at some point, Peter came to pay Paul. Peter couldn't pay Paul, and everybody lost everything. He was a scammer, but that put a huge black eye on the ecosystem. We had some bank failures. There was a whole lot going on during the crypto contagion. I'm glad that bad actors and failed actors have moved out of the way so that we have a more mature market. So you are just getting in, you're actually benefiting from that. Last point here, that Bitcoin was one of the 5 for best returns, and it proved to be a fantastic return on investment. Final point about Bitcoin IRAs, there's some tax advantages, the high potential returns. I think I would be most interested in deferring tax or the tax advantages. That is kind of the stalwart, how to delay and defer, pay every single bit of tax you owe, but not one penny more. And also use structures, regulated structures to get there. High potential returns, you have diversification within your retirement portfolio. You do have to always pay it. Let me get at it this way. I wouldn't really pay attention to the volatility because as a matter of retirement, depending upon your age and stage, do I need this money today? That's not a great place. If I need the money in 10 years, that's a fantastic place. If we think about the Changely blog prediction, we're again talking about long-term strategies. There are regulatory considerations, but that would be regulated also by, or that would be monitored by the IRA issuer. And so I think those are 2 really great ways. And then, I've mentioned some things about altcoins. This is a new part of the presentation, so it's pretty short, but I wanted to, again, just echo some things I said earlier about there is life beyond Bitcoin, but I want to encourage you to start there and learn what you need to know between Bitcoin and stable coins as you're moving your way through. I love Ethereum. I hold Ethereum as well. And so when you think about going beyond Bitcoin, anything that is not Bitcoin is usually considered an alternative. Sometimes people call them SHIT coins. So do what you want with that. But there can be strategic advantage to holding the alts. You want to have a diversification of assets within an asset class as well. Then there are some future trends and opportunities. Sol is really interesting. The Cardano community is quite interesting as well. I already mentioned the Dogecoin Nation as well. All right, so those are some my formal remarks there. I want to kind of take a temperature check in the room based upon kind of where we are now in terms of the learn to earn strategy, the bounce framework. What do you think your next move would be in order to either stay on track, to get on track, or to kind of get to the next level? I want you to make a commitment to yourself, and we're in community now. We're in a little safe community of how we're going to make a commitment to each other about some next right step. Maybe it's joining a class. Maybe it's joining a community. I'm going to revive my Mighty Networks community as a part of my From Cash to Crypto program, for example. Maybe you're going to buy some Bitcoin. Maybe you're going to look into Bitcoin ETF. Maybe you're going to do some research around Bitcoin IRAs, and drop a 4 if you just want some suggestions, right? Just some suggestions. But class, buy a book, join a community, buy some crypto, as suggestions, as well. This is an opportunity for you to really go to the next level. And I want to kind of share my journey, because when I thought about what I needed to learn, and Maggie and Ronald, thank you for sharing. Everybody else who is thinking about what your next right move would be, I'm constantly asking myself this question. So as I'm taking you through this, I'm thinking about what my next move is going to be as well, and it makes me think of just I'm a naturally I'm curious but cautious. I'm curious but cautious. I'm an only child. I'm my own best friend. I can play quietly by myself. This young lady looks like me. She is not me, but she certainly could have been. When I saw this picture, it's kind of like she's concentrating on how to write very carefully. My mom were here. She would talk about me saying, I do it myself. I do it myself. One of my first things to say, I guess I said, Dad, Mom, um, food, and I'll do it myself. That's but they tease me to say I didn't learn to walk. I first ran, which was interesting to say. And so that is really interesting. But there have been times in my life when I actually did color outside the lines. This is a picture of me. I My students find my music and my poetry every year, it seems. I was a Deaf Poetry Jam finalist, and did a lot of performing back in the day, right before I went to law school in 95, and through that time and in the early aughts. I was performing regularly, from the New Yorican to, oh, it's the place in DC. I can't remember the name of it. It was one of my favorite spots to go and join a cipher and perform, also sang. That's an outside the lines experience that does not suggest a very conservative outlook and approach to life. And fun fact, this is me in 1993 at the US Open. I played on scholarship at Northwestern, and I played professionally for 4 years before I went to law school. So there have been times that I had a traditional path, but also times I had a very non-traditional path. And as I look back over my life, I have a big birthday coming up, and I'm starting to kind of just think about my life and being willing to take risks, calculated risks. Because the whole thing with perfect grades and perfect extracurriculars, perfect resume, perfect jobs, I still in many ways was perfectly miserable, but my finest, happiest moments were outside of the lines. And coloring inside the lines, that might be great for adult coloring, but really not for the future. We have to start to challenge our assumptions, to become more informed so that we take more informed and calculated risks. The idea of being scammed is so terrifying that it will kind of paint us into a corner. So maybe for someone, Maggie, for someone like you, it's taking a step back and then getting your footing again, getting a solid foundation. Maybe it's buying digital, excuse me, digital money demystified. Maybe taking advantage of the free resource that I'm going to share with you all, where you can kind of get up and get going again. It's kind of like this idea of trying to learn something new and not doing it well or being taken advantage of, but still pushing past that to join a trusted community, to join a network of folks, to get the information you need to make to make sure that you are protected against those who would prey upon you in order to get something from you. That's definitely where I started when I think of 2017 leading into 2018. Um, One other way is maybe put investing on the sideline and think professionally. How can you prepare yourself, whatever it is at your existing area of expertise or your job or your career? In what ways is this technology disrupting? Can you be the smartest person in the room? This is where I started. I did not start buying at all. I started changing my world professionally. That led to being invited to go to Thailand and present to hundreds of lawyers there. And remember, I had just started in 2017. I learned more on my flight there to teach them than I knew in 2017. I'm always going to bet on myself. Anything I don't know today, I promise you I'll know sooner than later. That led to me being invited to the World Intellectual Property Organization in the same year, 2018, less than a year from the time I started learning about the underlying technology. That was me sitting before hundreds of lawyers and legal staff and staff members at WIPO. That was transformative for my career. It led me to create the first blockchain, crypto, and law online certificate program. That was the precursor for me stepping out on my own. And in addition to being a tenured professor, starting my own outside learning and onboarding as well. Um, and going and doing all these presentations. I changed professionally and continued to learn that made it easier for me to enter as an investor as well, right? Talking about the rules and regulations and then informing others. And that led to me serving as the chair of a major DAO foundation, being paid in their token, completely changing my economic position, completely changed my relationship with money and the idea and concept of wealth, completely changed my ability to have freedom and discernment to make higher quality choices and not always exchanging my time for money. Learning that the real finite resource is my time, but that if I free up my time and invest my time in creating opportunities and assets that go out of my house and work harder than I do, so I can spend more time doing the things I love, being in a pool, having a proper cocktail, minding my Black owned business, and also doing great things for my family, being able to buy a home for my mother, and all of the things that really just it changed everything. It created freedom for time, of choice, of options, of travel, of rest, of being able to do everything I want to and nothing I don't as CEO of me. I have a new trademark that is now registered, the CEO of me, that allowed me to lean into my first mover advantage. And that is what I want for you. So as you all think about, you know, buying crypto again or joining a class, joining a community, I hope that you will think about the From Cash to Crypto program that I run during the summer. I'm going to do a summer cohort that goes with this as well. And you can find out more information about that as we move forward. But what the From Cash to Crypto program is a multi-tiered program. So you find what might work for you. You can do it completely DIY. You have instant and lifetime access. I'll tell you more about that in a moment. But all of the tiers, you have either community and engagement, and then top tier, not only lifetime access to the course, but also access to the community. And we keep the community small. The unwieldy community of hundreds or thousands of people, I think that can be effective in some ways, but curating an experience, have kind of like a high, kind of white glove service, high touch, depending upon your tier, I think makes a big difference and gives you the confidence to continue to move forward with the content, with community, with coaching. And if you want a top tier VIP experience and doing some one-on-one work with me as well. So the first level is explore, the foundation building, it's self-paced learning. You have instructor-led, instructor-guided content. So you'll have videos, you'll have resources, you'll have tools, and lifetime access to that content. The next level of the three is the core. So you have everything from the DIY, kind of do-it-yourself, online, self-paced, paced as you go, as well. Expanded skills, you dive deeper, you engage with the community. So you have a community pass for a year. You have lifetime access to the core content and an annual pass. You can do it just for 1 year. You can renew annually, make it super easy. You engage with peers. We have regular community engagement. You can ask me questions and ask the community questions as well. And so you are actively learning while you're earning. Regular updates. You have access to a resource library, and sometimes I'll go live in Mighty Networks as well. So there'll always be these pop-up opportunities and continuing learning opportunities. Encore is the top tier experience. It has all of the core benefits, so not only lifetime access to the modules and to the community and all the community benefits. But here's where the networking goes to the next level: advanced investment techniques. We have guests who will come on and speak directly to Encore members, be it Encore only presentations. There we will have monthly Ask Me Anything sessions. So I kind of call it my professor office hours. But every month you get to ask me specific questions. So if you're in the Mighty Networks, you can ask me and the community or my team, and that will just be not just, but conversation there through our message boards and things of that nature. Monthly AMA sessions are like this. They're live, and in fact, not exactly like this. They're the regular traditional Zoom room. I can see you, you can see me. I may share some updates. I may have some slides. We may just be talking. I may get some questions, but those monthly AMA sessions keep you on track so that you know everything that's going on in the ecosystem and you can stay ahead of trends. In addition to that, you have the availability of one 30-minute power session, a one-on-one with me, where we can talk specifically about what your needs are, what your concerns are, just on a one-on-one basis. And you can do that anytime in the 1 year. And every year you get a new opportunity to do that as well. Bonus offers here: VIP access to events. You get a signed copy of my book. And also, remember I mentioned earlier the Ready Wallet Launch Challenge access. That will give you access to those videos and that training. It's a 3-day thing, but you can do it at your leisure. It's not something that you have to show up for live. But as an additional benefit for those who register specifically or sign up specifically for Encore, I will add that as well. So think about at what level of engagement are you kind of getting off the sidelines? You want to get in the slow lane, you want to get in the middle lane, or you want to supercharge your experience with other like-minded VIPs that are really ready to rock. That reminds me of one of my best students, and one of my first, actually, from 2020, Anthony Ware. He's gone on to do amazing things. He still pops in from time to time. Sometimes I look and see if he's on. He's like my teacher assistant in my head, and this reminds me, seeing his face, that I have to follow up with him on that. But he always says I'm his go-to source for all of his questions. He respects me and respects the work. He's seen the evolution of it over time, but he always knows I shoot straight, unbiased, focused. I'm always learning so that I can empower you to do so as well. And I'm honored that he sees me as a trusted resource in network. We have folks like Brittany, who has come to a webinar and then joined from Cash to Crypto. She dove in and had a fantastic experience. And she had some traditional finance background, but she was kind of blown away by all the things that she learned that she didn't know, in the same way I did. I was very humbled to start learning about crypto and realize how much I didn't know about finance and about investing. Antonio, fantastic student, and says this course has given me the confidence to actively participate and add value in crypto conversations. He went on to invest and really appreciated the organization of the material. And he was a regular contributor to our AMA discussions when he was a part of From Cash to Crypto, a live cohort. Cass Mendez, now this is a person who invited me to speak for her HubSpot community for her organization. So being able to present to organizations is also something that I love, and I can curate the From Cash to Crypto program specifically for organizations. And I enjoy very much doing that. C-suite, mid-level, HR, regular planning, law firms, banking institutions. I've done it all. And so I'd love to do that for you as well. And Kat Walls as well. She didn't know a lot about finances, and she was she was one of my most skeptical folks, but she is a lifelong learner. And so I was so grateful to be able to share with her a community where there is no dumb question, that we're all learning regardless of our level, and that she came out with a sense of confidence to start buying. And she knew that she didn't know everything, but she had enough confidence, not just in me or the program, but in herself. And that is the trifecta. I want you to continue to get to know me, continue to get to know the material. I'm giving you a bird's eye view of the way that we would go through. We actually take more discrete topics and take a deep dive. So, this might feel kind of like a train, but I want to make sure that we cover as much ground as possible because everybody's kind of at a different level so that you can decide what your story's path is going to be. You've heard my path, you've heard the path of others. Some of this may resonate with you and you think, I don't understand, and it seems too complex. But in the community, in the course, and in live cohorts, when I offer them, I don't offer them often, but one will be coming up in addition to this opportunity, breaking down complex concept designed for beginners, those new to crypto, but also those who are know just enough to be dangerous and want to reset their foundation and move to the next level of decentralized finance. Continuous support, this idea about the risk is something we all think about. It's not the absence of risk that moves the needle on investing, but it's focusing extensively on risk management. One of the first things that you will receive is a risk assessment tool to figure out what the best track for you is, what the next right step is. Because obviously my goal is always to empower you to make informed decisions that align with your tolerance, that align with your age and stage. The decision a young boomer makes is not going to be the same as a Gen Xer, which may not be the same as a late millennial, which may not be the same as Gen Z and beyond. So thinking about this is something I hear a lot, and maybe this resonates, that I don't have enough time to learn something new. That is exactly why you need to learn something new. Most people stop learning the moment they leave formal education, and they learn just enough to keep the same job or career, but not much more. It's a little bit different for lawyers and some professionals that have a licensure requirement. Again, I'm licensed in New York, Pennsylvania, New Jersey, and DC. I have continuing legal education every year for the rest of my life that I'm a practicing attorney and a licensed attorney. So I have to learn new things, but it shouldn't be a have to, it should be want to, and also really, again, a need to. The world is moving so fast that if you're not keeping up now, it is easily going to feel like, and it may already feel like, drinking water from a fire hose. We understand that time is valuable. I'm a little busy myself, but I'm never too busy to create opportunities to maximize and manage my time so that I'm creating assets and resources that give me more time back. You can learn at your own pace. You can learn on the platform. You can access it anytime, anywhere. If you join the core or encore programs, you can access the Mighty Network at any time. This is something not only you can do, but you must do if you want to stay on the leading edge and not get left behind, not be the blockbuster of the world. And let's talk about expense. Thinking about the money that you spend in order to learn. Actually, the program, and we'll get to that, is quite reasonable. You have everything from free resources if you're following me on YouTube or on my not so weekly newsletter or on my very weekly podcast. You're getting a plethora of information to begin with. When we come together to think about the investment strategies, one of the best investments you'll ever make is in your education, and not just education, but in your continued education, where you can save hundreds of thousands of dollars about going to some formal program and learn in a trusted community for a fraction of that. We've already talked about the volatility or instability of the markets that continue to mature, in particular now in 2024. So, really, this is your moment at your crossroads to continue to learn and grow or get left behind. Um, if you're left behind, you will fail. What does getting left behind look like, is what I should say. Failure to adapt to market changes. Susceptibility to scams. We've talked about that a lot, and Maggie shared her experience in the chat, for example. So continuing education helps us all trying to stay one step ahead of the scammers. There's no foolproof proof way, but there are a lot of strategies to test, a lot of ways in community to try to avoid as well. If you're sitting on the sidelines and not moving forward, not continuing to learn, there's missed opportunities for diversification. There's the risk of making emotional rather than informed trade decisions. I am guilty of that. If you're guilty of that, put a +1 in the chat. maybe even a +10, where I just wanted to do something quickly on my own, didn't measure twice to cut runts. Ruined. I have nobody but myself to blame. I'm not into blame and shame, but the reality of taking accountability for moving too fast. Not, as my nana would say, measure twice to cut once. We got to measure 5 times to cut once in the crypto space, and our community will encourage you to do that. We can overlook the importance of community insights when we're either not participating or moving too quickly. There's a danger of moving too quickly and also a danger of moving too slowly, and we want that sweet spot. And that's why constant community is a really important thing. So if that sounds like something that would be beneficial to you, if you want to be in the top 20% of high performers in order to stay ahead of the curve, to avoid the middle, and darn sure avoid the bottom, that tail that by the time everybody else is moving, they're like, hey, what's going on in here? We all want to be in the south of France minding our business and having our assets working harder than us because we invested today strategically, prudently, in community, with the right coaching, with the right content. And so thinking about how you're going to grow over time, not the get rich quick scheme, but to get wealthy quickly in terms of the wealth of our mindset that will lead to the assets that will make that a reality.